Good morning, everyone, and welcome to the European crossover webinar. And the dollar's been relatively quiet. Relatively quiet from yesterday. Obviously, we're looking at here on the 30-minute, and we eased back a little bit, and then we've reverted back up here on the. Let's pull this over here. And we weren't expecting a whole lot of action during MLK Day. We had 96.51, and we're just very close, made up to what, 96.47. Euro did go in and dip down here to 30.46. We were looking for 13.41. And on to the gold, we were looking for 12.77. Now we had 12.79 before, and let's see, got as low as, we did get as low as 12.77. Oh, okay. British pound kind of working a little bit higher here. One, I wouldn't say surprises. We finally get the Aussie yen to finally pair back after some quick pops in here. Now we're starting to pair back in after, boy, some huge runs really associated with what was happening with equities. Maybe, as we talked about, maybe we're now starting to see the whole thing about, like I said, if they were to go by what is, I don't want to say go as far as extreme as to say reality, but instead of the hopes that something is going to happen on the tariff front, the continued, the Chinese are going to do some type of stimulus every single day, which was almost the case a little over a week ago. But we've also seen the dollar yen also pair back a little bit, not much, but just a hair. Okay, it's still up beyond that 920, 927. One thing that we did see a little bit of a surprise in here is look at the dollar CAD. We're finally moving higher here with the dollar CAD. And although crude oil is still relatively strong, to say the very least. And the euro, like I said, it took that little bit of a dip here. We had 13.41, what they made down to 13.45, 46. But it's, the market's starting off a little bit quieter. I think one of the reasons I've kind of looked at, started to take a look at some of the cross rates, because sometimes like I said, we just haven't seen that much action per se, with majors. In the sense was, the dollar unable to either break to new levels lower or break to new levels higher. The euro, as Blake stated, pretty much stuck in a range. The one, bigger movement has been associated with the pound, obviously for good reasons. We'll go on and take a look here on the morning bid, and then we'll cover some news, and we'll just move into the analysis from there. Let's take a look here. Be just a moment. I had the report already pulled up, but I'll just pull it straight off the Reuters. So in the end, Jeremy Corbyn puts his name to an opposition Labour Party amendment last night, demanding the government give Parliament time to consider and vote on options to prevent a no-deal Brexit. Among the options is a second referendum. Something May has ruled out and which Corbyn himself is not wild about. However significant this remains to be seen. The amendment will be studied along with others and may well gather traction before next Tuesday's Parliament vote, but May will meanwhile use it as leverage to persuade hardline Brexiters and the DUP that her deal is better than any alternative, including Brexit. Germany's Angela Merkel and France's Emmanuel Macron head to the German border city of Caen today to sign a new treaty for the Franco-German cooperation intended to deepen the historic 1963 one that marked the post-war reconciliation. The Aachen Treaty will outline closer cooperation between the national intelligence services and police in fighting terrorism, and so forth and so forth. Really, we just want to move on to the markets themselves. Let's see. Let's move on straight to the markets. Another downgrade of world growth forecasts by the IMF, worrying signals on January trade activity, fresh tensions between Washington and Beijing over Chinese telco giant Huawei, and unresolved Brexit impasse have all conspired to knock global stock markets back on Tuesday. I did see the S&Ps; they're not down very much, with the dollar strengthening sharply as U.S. markets return from Monday's public holiday. Ahead of Tuesday's European Central Bank, MSCI index of stocks fell for the first time in the 5 trading days, with Shanghai's benchmark off more than 1%. The dollar index rose to its highest since January 4th. And let's go move on. China's slowest growth rate since 1990. We did go on and cover that. Euro dollar declined to its lowest level since January 3rd, as no European stocks were set for a record second straight day in the red. The ECB on Thursday is expected to register its concern about the sharp slowdown in the Eurozone economy and at the back end of 2018, and send dovish signals about its flexibility in the timing of its planning monetary tightening. Germany's ZEW sentiment index for January is set for release, and looking out for the what we're looking for was, as I mentioned, the German ZEW World Economic Forum, UK December jobless, November earnings for UK, and Q4 earnings for IBM, Johnson & Johnson, Prologis, Halliburton, Travelers, Fifth Bancorp, and Capital One. Let's move this out of the way. And I'm just pulling up the economic details. Be just a second. UK claimant count will be up at the bottom of the hour. Eurozone will be at the top of the hour coming up. Prior was minus 21, so the German ZEW expectations have really dropped. But I would probably expect maybe a little bit of a rebound, since we've dropped so far. We do have Canadian wholesale trade at 8:30 Eastern, and U.S. existing home sales at 10 a.m. Eastern. So we'll have some UK data at the bottom of the hour. And we'll just go over the news real quickly. Now, like I mentioned about the Canadian dollar, just say the Canadian dollar weakened against its U.S. counterpart on Monday as investors worried about progress on trade talks between the U.S. and China. That's certainly going to be affected against the or is affected by the perception of that. The IMF predicted the global economy would grow 3.5% in 2019 and 3.6% in 2020. Due to weakness in Europe and some emerging markets, and said failure to resolve trade tensions could further decline. U.S. and China made little progress. Today was the first time we've seen a headline in 2019 that made that maybe the negotiations are a little further apart than what markets have been previously anticipating. China's economic growth cooled slightly in the fourth quarter from a year earlier as expected. And let's take a look here. Let's go and quickly move on. And we know that with the Aussie dollars, they have backed off. Well, it says the Aussie dollar and New Zealand dollars were subdued on Tuesday as concerns about the outlook for Chinese and global growth cast a shadow over commodity-sensitive currencies. China reported growth had slowed last quarter, and the IMF trimmed its forecast for the global economy. Iron ore, for instance, has hit its highest in 12 months on the expectations of solid demand from Chinese steel mills. Our optimism largely stems from our expectation that the Chinese policymakers will respond to the slowdown and target policy measures to support lagging sectors. And we talked about this with the Aussie dollar. Every day they want to hang their hat on there's a little bit more stimulus coming. There's a little bit more stimulus coming. So it's really the Aussie dollar. Today we've gone and dipped. Here in the Aussie yen, if you look here with the Aussie dollar, you see a little bit more protracted pullback also. the whole the whole play lately has just been on the perception that they're going to reach a deal, the perception that we're going to continue to get Chinese stimulus, as opposed to what is reality. And I don't mean that the markets are devoid of that. I'm talking about the Aussie dollar, but that the focus has been on the perception that they would get something done. And now they're saying is, well, okay, maybe things aren't so good, but then here, like I said, they're still hanging their hat on that. The combination of rising export volumes and broadly steady prices means that Australia's trade balance should continue to post monthly surpluses. Across the Tasman Sea, the Kiwi dipped to 67.25, having already eased for 4 sessions. Median forecasts that the CPI wasn't changed in the fourth quarter for the previous quarter, held down by seasonal falls in vegetable prices and a drop in petrol. This week's inflation report is shaping to be a pivotal one for the policy, said Jared Kerr, chief economist at Kiwi Bank. We and the market expect a flat reading short of the RBNZ's forecast of 0.2%. Markets already priced in a 50% chance of a rate cut by the end of the year. We don't expect any movement this year, he added, in part because of the rising rents and construction costs were deeply housing-related inflation ticking along. And on to the dollar. Dollar near a 3-week high after the IMF cuts growth forecast. The dollar had been considered a consensus short trade since the end of 2018 on concerns that the Federal Reserve will pause its interest rate concerns. And if you look over, the last, couple of decades or so, it's what the direction or perceived direction of a central bank was going to be, or running out of gas at that time as far as movement would move. But right now we're in a situation that, even though, as they're stating, that that was considered the consensus short trade, but even though this is the Fed is starting to ease back, you're still seeing people move to the dollar as a safe haven, even though generally when you get into a trade war, it goes the other way around. So we've been in this anti-situation, it seems like, but we think the dollar's gains may be overdone, and the European Central Bank might offer some guidance later this week on when it will start to tighten policy, said Manuel Oliveri, currency strategist at Credit Agricole. Market watchers say the dollar may also come under pressure as the government shutdown begins to weigh on domestic growth. Well, once again, I think we have to look at these markets on perception. It was only, I think it was 2.5 weeks ago, that Fitch was saying, the biggest concern is the twin deficits, and that the government shutdown is only going to go on and somewhat exacerbate things. Really? Looks like a pretty good strong uptrend to me. That's what I'm saying, is that and I myself and a lot of others thought, okay, the dollar's now finally going to get its come up, and so it'll come back. Look, it's all right now, these markets are going in different, it's almost like cross currents, and as far as what perceptions have been. The reason why the Australian dollar, even after a big run up after the flash crash, continued to go on and move higher. And then we're looking at actually the Canadian dollar here, but let me move it back here to the Aussie dollar. Continue to move higher and stay up there, because the whole idea was, they're just, a resolution with Chinese situation is just around the corner. Now, I did go on and post this over the weekend, and we talked about this yesterday. I think we're seeing a rounded top here in the Aussie dollar. And the reason I made such a big deal about it is because it's one of the things that you don't see very often. So maybe we'll finally start to pare back, but may be a little bit more to do with what's going on with China as opposed to the technicals, to be quite honest. Anyway, moving back on down here, market watchers say the dollar may come under pressure with the U.S. government shutdown. Morgan Stanley strategists believe the U.S. growth in the first quarter is likely to fall below the forecast of 2.2. The IMF cut its growth forecast for 219 and 220 because of weakness in Europe and some emerging markets. The yen, another safe haven currency, was steady against the dollar, fetching 109.64 in early trade. The slowing global economy and depressed oil prices are expected to force the BOJ to revise down its outlook for economic growth, said Asama Takashima, currency strategist at Citibank. So let's just move on to gold here and finish up. Gold prices held steady on Tuesday, hovering near a 3-week low. The gold has become a victim of a stronger greenback. When we said, when we were looking at this was a week ago, we said the one thing that the gold would need to do is if we could see either the dollar falter, is what I said, falter to new lows. We needed that catalyst, or equities to, get a pullback. Well, neither's come. If anything, the dollar's continued to move higher, and equities, well, we already know what the story's there. So gold has finally started to hair back. Although it's not falling apart, but it says it's a victim of that. A weaker euro and concerns around growth in Europe has given a leg up to the dollar, pushing gold prices below the key level of 1280. We haven't seen much of data coming out of the U.S. Recently due to the government shutdown. If we see more weaker data, that could cause bond yields to fall and support gold. Also, technically, we need to see the gold above the challenge of the 1300 level. And lastly, we just mentioned here, China's economy cooled in the fourth quarter under the pressure from the faltered domestic demand and bruising year of tariffs, dragging 2018 growth into the lowest level in nearly 3 decades. So let's go and move on to the bias chart now. I think we've laid out got a lay of the land for the day so far. So we're looking for 1341 here in the euro. And I want to say as we start the week, well, the week started yesterday, but with the holiday, there wasn't a whole lot of movement. Remember, we had closed the weekend out around, 1363-ish or something. Well, we're about 4 pips away, and we moved a little bit higher, we moved a little bit lower. I mean, to start out the day, we did make a move pushing higher, but for the most part, we've stayed relatively quiet. Looking here on the euro dollar, let's take a look at it here on the 2-hour. Well, Blake makes a good point in his head of the week video. We'll probably see the euro weaken going into the ECB. Thought being that, hey, they're probably going to remain dovish, or I'm not so sure if they're going to try and talk about when they're going to go in and tighten. I don't really see that's not necessarily in Draghi's vein to do something like that, but you never know. But you can see here that the momentum continues to work lower here against the euro dollar, and how much further we can pull back. Certainly, you would think that going into the ECB, it makes things a lot easier just to continue to be on a sell mode. So we look at support here. We have it at 1341. Yeah, I don't see any reason to change, at least for now. Once again, we mentioned this yesterday. Doesn't mean we won't break lower. When we did the analysis over the Asian analysis that we kick off the week with, there's still the potential that we can move to 1295, and that happens to be confluencing with 1291. I think we have it marked over here. We may have it marked on the daily, but we'll take a look at that. So we're looking for a move potentially to 1295, a pullback, which would confluence with 1291. It's just a matter of whether this euro, you can see the significance here of the 1340, even also on the daily. Okay, so for right now, we're just going to hold this, although the momentum is certainly weaker now. We've even flipped on a very shorter term basis in the movement, starting to roll back, and it just seems, I know that we could get a bounce back, but certainly the momentum, when you look at this overall, we're below the trend line. Actually, probably the euro is probably doing well, just even holding here, but it seems like it's going to be the move of less resistance, which will be just a move going further down into the ECB. We may not see, maybe we'll start to see that translate later today or tomorrow, but it probably seems the most probable move of all. I don't know, I don't necessarily see the euro turn around and rallying at this point, barring some kind of a headline or something like that. I did see some news out of Reuters about the Italian bank still needing some more money and what it's going to take for them to get things, some fresh in capital. And I think it was something like 200 million euros. Looking forth, like I said, I'm going to go with this 1340. We're going to go and keep that for the bias chart support. Looking at resistance, well, we had mentioned here to kick off the week yesterday we had 1405. The 1405 is still good. I think so. On this, I don't see any changes. Now we know 1416 is key here, but initial resistance right there at 1405. So no changes here on the euro. Let's go on and move into the cable though. Now we had 28.23 here in the euro for the support 28.88. We're actually starting to move, clip a little bit higher here at this point. Let's take a look here. One of the things that we looked at to start the week out, let's go to that. We talked about this, engulfing bar, and that when you looked at it on a weekly, we had a long-legged doji here, which generally means you're going to pair back. Well, we did pair back. We haven't paired back much, but we did go on and start the week. At least yesterday, we were pairing back. I'm starting to see this work a little bit hard. Now we did get the little headlines out of and concerns to the whole Brexit. We're still going to be a slave to this whole Brexit thing for a while. But when you look at it, as I mentioned, we started out the week, it's on a buy mode now. So although it was open for a bit of a dip, and we had 28.35, apologize, 28.23. The low for yesterday was what? 28.30. Starting to work back a little bit higher here. For resistance, let me see, for support now, thinking that now we may start to rotate a little bit higher at this point. We're actually going to put our support for today at 28.51. Looking out. I'll look for those moves back to 28.51 to be supported. And for resistance, the 50% comes in here, 29.16. Also, I like this 29.16 right here. You see this with these two bars here before the thing ripped up. So I like this 29.16 right here, and that's the 50% for initial resistance. So that would also take out this high right here. Could we push up to here? Yeah, and that would just be just above this high right here. So let's go with 29.24. 29.24. 29.24 for resistance here on the cable. And let's go move into the Aussie. No, we're now starting to see the Aussie slip a little bit. Now we know 71.20 is the 23%, and got a low of XE at 71.19, and they're just up a little bit higher off of that. Let's go move into the 2-hour chart. Seventy-one 20 is at 23%. That's where, I mean, they dipped as low as, what was it, 71.21. Okay, so they're kind of holding there at that 23%. We know here that the momentum has already started to change. One of the things that we shared over the weekend in the Asian analysis, I pointed out that we were getting what appeared to be a rounding top. And you don't see those very often. It was a little bit, I'll say, not overly stretched out, but right here. There you go. So I probably would like to see it break from right here, but it is starting to break now. Probably has a little bit more to do with the headlines and, as I mentioned, than the technicals. This is a key support level here, the 7140, but they did break, and our support level was at 7120. So what can we see? Well, we already saw that we're already at 23%. Where could we go and pull back to? And as I said, now the market's starting to see that things are a little bit more angst between the U.S. and China. So maybe we may see a little bit better pullback here at this point, and that would at least lead me for today to put us right here, 71. Let's call it 7106, and you can see that coming right across right there, right in here. So you're going to be looking at 7106 for the support for today. Man, resistance. It's going to be right there. 71.59. 71.59 for resistance. Now let's go and move into the Kiwi. We had 6701. You can see the Kiwi is continued to be, continue to slide here. I mean, as far as, on a very short-term basis, you can look here in the momentum. It's just continued to drip and drip and drip. We had 6701. Now we know the key level here is 6684. Let's take a look. We had 6701 as our support from yesterday into today. The low's been 6709, and we've been in a sell mode from right here. You can see here it's jumped up, but it has not been, even though it's made a jump above the slower exponential moving average, for which for me I used the 27 as its slower exponential moving average. But you can see that the faster one has continued to remain lower, so we're still in a sell mode, and the market continues to slide back. When we look as far as support, I like the 6686. That's a 61%, and it's coming right across here with these body touches. So I do like that. 66, let's call it 6686. Still a little bit of ways down here, and especially when you think about as far as it's been falling, unlike the Aussie. The Kiwi's just been, working lower and lower. So, but we'll be looking at for support 6686. With resistance coming in right there. Let's just move it right there. It's pretty oversold, and if we do get a bounce back, not really expecting one, but resistance would come in right there. It's 67.70. 67.70 here on the Kiwi. Well, there you go, 67.70. I think we can now start to change this on a short-term basis to bearish. And with that, we'll move on to the dollar CAD. Oh, we just got, there we go. Just got UK data come out, and that came in just a little bit weaker than expectations. Well, actually, Reuters poll was for 20. They got 20.8, barring 2.9 versus a 1.9. And let's quickly move on to cable. 2902. Now, don't forget, we're looking for our resistance here. Bias chart resistance coming in at 2924. 2916 is going to be the 50%, but we are looking for 2924 for resistance here. Continue to work a little bit higher here on the cable. And looking at here on the 30-minute chart, let's take a look here. All right, there's 2931, but we are looking for 2924 just to take out this high here. Tell you what, let's keep it right here. 30-minute. While we do our analysis here on the dollar CAD. Now we've seen the dollar CAD finally pop up, and apparently we've gotten above that 33.14 area, which has been important. Really big deal about it if you think about it, because that 33.14 was keeping the market in check. So we finally been able to scale above it and scale above it with a pretty good solid 2-hour close. Okay, support now. Guess where support's going to be? You got it, 33.14. Actually, we'll just take a dip just below that. I'll show you where. Right here, we got it there at 33.07. So that comes in at there, 33.07. Looking for resistance. We didn't get that big of a move from the cable. I thought we might make a little bit push to that 29.25. We're at 28.95 right now. Well, 33.66 is going to be the 38%. And if you look at that, you got a little bit of a ridge right there also. See right there? So let's just go with 33.66 for the resistance level. You can see that coming right across here. And a good area for them to shoot for. And as I said, key for them to finally make it above this 33.14 and support to come in just a hair below that at 33.07. What was resistance before now becomes support. Let them touch it just a little bit below. And let's go into the dollar Swissy. We were looking for 99.88, and the high was Oh, right there, 99.88. So it's been a high. And you can see these touches coming across. So there we go, 99.88. I don't see any reason to change that. We've had a pretty good run here on the with the dollar Swiss. Short-term momentum has definitely turned higher. So I would expect a little bit of a pause here at this 99.88. Now for support. I still like this 99.23 if this starts to rotate a little bit lower. So what we'd be looking for on the downside, at least initially, and where we start to see some support. Now, would mean that necessarily as a downside objective. I think that probably be right in here, 99.02, which that's been a huge level, but at least initially see some buying back around, as I mentioned, the 99.23. So really no changes here on the dollar Swiss, although it is looking to get maybe a little bit tired. We may, and not even doesn't even look that tired. Just looks like it may just want to pause because the ranges are still very, very tight. To look at this, you probably think it would be a 15-minute chart, and lo and behold, it's a 2-hour chart, and the ranges are still very, very tight up in here. Let's go move into the dollar yen. Well, we've weakened a bit, but we're still holding up very well. Now, the key thing was we were able to get above that 927, and boy, did this thing push higher and continue to push higher. And then we had to open up the upside just in case it pushed even further. We were actually right at a resistance area here at that, I think it was 885 or 888. I mean 985 or 988. But with the momentum that it had, could it push even higher? This is a market that a lot of people thought this is something to look forward, for the start of the year going further out with the calamity that we saw in the equities. But certainly the equities came back, and part of the reason equities came back, they thought, once again, the whole perception thing, things are going to work out. The China and the U.S. are going to, Trump's going to look for that as a victory and so forth. And now we're seeing that maybe things aren't as close. But you never know. Like Blake was saying, you can't trust politicians. But that being said, we've pared back a little bit here. So for now, resistance is going to be right there. 967. That might be a little bit too tight here because you can just rally back up on some short coverage. So it's just going to have to be on these body touches, which is right there. Let's mark this off. We'd had it for 1002, unless here's the thing is we've heard some of these moves, like even with the Aus, you've had phenomenal moves on these, when the S&P ripped up, and hit the stops on the Mnuchin thing, with it, they were considering lowering tariffs and so forth. Now you would look for the market, in all likelihood, they'd be wanting to fade this. But like I said, once again, if they come out with some kind of deal, and it certainly doesn't look like anything's forthright, coming forth in the next few days or something, but they would look to fade that. So now we can look at these highs here and look for 984 for the bias chart resistance. And this may hold in place unless we see some big news headline. For support, well, we mentioned that 927. if the market's going to rotate lower, I'm just saying is, and we can rally back up, but and that's obvious if we take a dip. We're not even that far away. We were able to dip, so I really want to move this a little bit lower, and I think that would come in right here at 914. There'll be some also at 908. 908 was pretty key on the way up. We tried to rally up, and actually at 908 was a reaction before they rotated lower. Then they came back up again in the Asian session, and then the rest is history. And I'm talking back from right here. Now you can see we did it all over again too, but we'll go with 914 for the bias chart support. And let's go move into the cash dollar index. As I'm saying, we're not seeing a whole lot of movement from where we started yesterday, obviously for good reason with the MLK holiday. Dollar's starting to ease back just a bit. But not much movement on the euro itself. And the reason I mentioned the euro is because the euro does comprise 56% of the cash dollar index. Actually, a little bit over 56, I think like 56.4. So quite often you look at the euro and the dollar index trading inversely. So it looks like we're starting to form here, maybe a little bit of gravestone doji, but the day is certainly not over. Let's take a look at it here on the 2-hour. Now we had 96.51 as resistance. So until it's taken out, that's resistance. And you can see here, actually right in there. There you go, 51 right there. 96.51 being resistance. Until it's taken out, that's still resistance. So that's going to remain the same. Well, where could they pull back to? Well, where do you think? Well, my guess would be right here, back to the pivot. 96.08. Remember that the market vacillated back and forth Wednesday, Thursday until Friday. We started to push a little bit higher. If we're going to rotate lower, that's what they would go to. Now, on a short-term basis, if you were scalping it, there'd be some support right in here at 96.18. So 96.18. But like I said, if we start to rotate lower, it's going to be 96.08. I don't want to put the support that close, but keep in mind this 96.18. If they're going to come back, you'll see probably the market hold up a little bit there, but we'll go with 96.08 for the support. And it remains essentially the same. Let's go and move into gold. So we're clipping along here now. So we had 1277 as our support, and that's well, it looks like they made it to what? 12, yeah, they made it right there, 1276.79, so 1277. So our 1277 is held. There it is right there. And what we're doing is we're just going across these touches. So we looked for 1277. That essentially has held, and that's going to remain the same for right now. It's going to be 1277. And as we try and work a little bit higher, resistance is going to be 1287. 1287 on the upside. I think we had 1286 before. No, we had 1285. So it's going to be 1287. Now, obviously, it's paring back because the dollar's starting to ease back a bit. And the dollar's been what's kept this thing in check. And, the gold market was holding up very, very well in light of what was happening with equities. But one of the things we mentioned from the prior week was it going to take for us to get above 1300? And we said we need a catalyst, whether it's going to be a faltering dollar or a break lower in equities, which neither we got. And then finally, for lack of not being able to move any higher, the market started to succumb and rotate lower we did. So once again, we're going to be looking at these upside challenges. If the dollar pairs back down to 1208, that may open the door to challenge about 1289-ish or so. But for right now, the momentum you can see is clearly down right now in gold. On a short-term basis, we have come into support. So, of course, you're going to see some short covering rallying here. But we'll be looking at 1287. Anyone who's played it on the short side, has played it, on the short covering, would be probably looking to see if they can stretch it up to 1287. If the market stretches beyond that, then it's going to be just pushing for other reasons. But I don't think that's a good area to step in and short it. I think you probably want to see if you could squeeze a little bit higher until we can start to see what happens with the dollar. But overall, from a longer term, gold's still holding up, very well. It could have broken harder, but it's coming into some decent support here at this level. Well, we've got the cable finally moving up a little bit hard. Look here. So there we are. We got 29.24 for our resistance. So keep that in mind here with the cable. We got that data that just came out about 20 minutes ago. Right there, 29.24 is what we have for bias chart resistance. Let's go on now, move into the 30-year bond. We did get this pop up here in the bonds. Once again, with a little bit of a weakening here with the equities. Not a whole lot, but a little bit of short covering here. Resistance, short term, we've already dipped back down to 44.30. Look at that. So it's just a quick little pop up here. We're going to give it a little bit more room here. We didn't pop up that much. We got up to 45.06 and we had 44.29, I believe it was our bias chart resistance. We'll move that up just a little bit higher, 45.11. There's going to be support right there, 44.18 here on the T-bonds, 44.18. Moving into the bonds. Well, here's that 64.10. I mean, we had a resistance lower, but we said, hey, don't forget about this. There's that key breakout area. And sure enough, that's where they ran out of gas. They end up a little bit higher, but for right now, it's going to be 64.10. It's pretty clear. Although we've already paired back, we may want to lower that a bit. So for today, let's lower that down to 64.03. See the touch is coming across here. So it's going to be 64.03 in the bonds. Support's going to come in right there, 63.70. So he did make that run up in here. We'll look for them to come back to support here, 63.70. Actually, lower just a bit there. So yeah, there it is, 63.70. That remains the same. And let's go and move on to the DAX. We had a support at 11.13. They got down to 11.06. Nice challenge back in here as they've responded quite well. I think the market's not going to want to go and challenge these areas right here. I think this is probably it right there. At least for now, that's what we're going to put 11.128 for resistance on a short-term basis. And support, we're going to allow it to open a little bit lower if it does, and which is going to be 10.40. 10.40. Look for this market to want to rotate a little bit lower. Well, we had resistance at 29.24, and they've made it up to 29.20 here in the cable. Euro's sitting like a bump on the log. Look at that. Dead in the water. And when we take a look here at the cash dollar index, just hanging around here, not doing a whole lot. There's 96.36. We mentioned watch that 96.18 for an area for some support to come in. And gold just kind of, it's come off its low, so a little bit of a short covering here in the gold. But that'll conclude the bias chart for today on the European crossover webinar. As I mentioned, with yesterday's MLK day, it wasn't like as if we had a whole lot of movement. Look at the euro, but we kept this identical. That remained the same. And a couple of these others remained basically identical. So not a whole lot of movement. Yeah, the cash dollar index was identical, well, go and get this posted to the room. Good luck trading today, and we'll catch you in the chat room a little bit later. Thank you for joining us here on the European Crossover Webinar.